you've just opened this exchange in UK. You're already in the US and in Canada, right?
That's correct.
So Cameron, I'll start with you. Explain to me, I know something about Bitcoin, but I don't quite understand why we need an exchange for Bitcoin, because it's public. I mean, we know who's trading with whom.
Sure. So people need a safe and reliable place to purchase Bitcoin, and we offer that. We're regulated by the New York Department of Financial Services. So that's really the main reason.
It's sort of the same reason why you need a NASDAQ or an IC. Exchange marketplaces online create more liquidity, more price discovery. They allow more market participants to plug in and participate, as opposed to just me and you exchanging Bitcoin. It's really a scale issue.
So you've been up and running in New York since October, is that right?
That's correct.
What kind of volume are we talking about?
So I think
sense of it generally?
On this month, we're on track to do about $100 million worth of notional.
And is that what your plan was? Is that on target for what you wanted?
You know, I think every month we've been increasing month over month, and we've seen the amount of users signing up in the last month alone has sort of been larger probably than the previous couple months combined. And part of that is due to the price increase in Bitcoin, and also the circulation of Bitcoin is going to be cut in half coming up in a couple weeks. And there's also a lot of interest from China. So we've seen actually a really dramatic increase in interest.
Well, let's talk about China just for a moment, because one of the things that's said about Bitcoin is that it is a way of people in China to get their capital out of the country. What truth is there to that, Tyler?
It may be. I'm not an expert on capital movement from China outside, but the Bitcoin blockchain is public, it's transparent, so you can see the movement of Bitcoin. If I send you a Bitcoin, everyone can see at least that Bitcoin moved on the blockchain. So it may not be so anonymous. It definitely is not as anonymous as people make it out to be, and it may or may not be used by the Chinese in that way.
I think one thing for sure is that when there's uncertainty in the macroeconomic environment, which we're seeing with the upcoming Brexit vote and the Chinese economy, people tend to favor assets that act like a store of value. Traditionally, that would be gold, and more recently we've seen people favoring Bitcoin, and in the month of May it was less volatile than gold for close to 30 days.
Yeah, there is a Bloomberg News piece out just now actually on that point, that gold and Bitcoin have traded together in anticipation of Brexit, and questioning whether now it is becoming a value repository rather than
so we've actually been saying that for many years. We feel that the killer Bitcoin app is really a store of value, and it's starting to behave just like that.
Here, this is a chart actually showing just what we were talking about, that Bitcoin is starting to move now with gold,
right.
which I take it, is that good news for you and what you're doing?
I mean, it lines up with our thesis. We think Bitcoin is a better gold. It's a gold 2.0.
So why is it better than gold?
Just when you look at the characteristics of money that make gold valuable, there's about 9 characteristics. It's more scarce, it's more divisible, it's more portable, it's more durable. It matches or beats gold across the board. It actually is finite at 21 million Bitcoin that have already been minted, and you don't need to keep it in a vault. So we think that it is a better gold, and sort of the way it's trading with gold and being a hedge against global macroeconomic uncertainty, like things like the Brexit. We think that lines up with our thesis, and we think that's positive. Additionally, if you look at the market cap of Bitcoin right now, it's about $12 billion. And so if it's going to disrupt gold, then there may be a 100x return in Bitcoin from today until that point, because we know that the gold market caps are over $1 trillion.